What's going on, gang? Today we have a great educational training about 4 types of subject to investors. So today, again, 4 types of subject to investors. Some of you may not know what a subject to is. Let me define that real quick, and then I'll get into the 4 types of subject to investors. A subject to investing strategy is where there's a motivated seller and they have a mortgage on their property, and the investor negotiates a owner financing, simply put, where the seller becomes the private lender for the investor. So simply put, the investor just takes over the seller's mortgage and the underlying existing mortgage stays in place. That's what a subject to is. Now today's training is about the 4 types of subject to investors. Okay, the very first type is what I am, is I'm a buy and hold guy. I'm a landlord. And what that means is I look for properties where I can buy that have significant cash flow, they're in an appreciating area, and I look for deals where I could buy at a deep discount for cash. And if I can't do that, then I'm willing to do a subject to deal with the seller because my private bank. And I turn around, I'll rent the properties out, get positive cash flow from it, get tax deductions from it, get appreciation from it, okay, and many other things. Now the con of that, the flip side of being a landlord buying subject to, is that the same thing if I bought with traditional financing. The cons are the same. I have to babysit this property, right? Because if the AC goes wrong, I have to fix it. If the plumbing goes wrong, I have to fix it. If I don't cut the grass, the city can give me a citation. So I have all the headaches of babysitting the property, okay, like normally. And I'm also reliable for the property, because if someone slips and slides and hurts their neck, I'm reliable. If someone doesn't cut the grass and tax, and I get tickets from the code violation people, then I'm responsible. So just like traditional way of buying a property, all those responsibilities and liabilities are there. However, the loan is the only thing that's different. Okay, so the very first type of subject to investor is a landlord, like what I do. So if you have a deal, or you want to get deals, or you want to sell your deals to someone, bring it to me if it's a subject to deal. I'm definitely interested. Go to mrnofluff.com and submit your deals there. Now, the second type of investor that love subject to deals are investors that create notes, what I call bank. They become like a bank in a sense. They don't become banks, but they'll buy a house subject to, and turn around and wrap it and sell it to a retail buyer, right? That cannot get a loan or doesn't want to get a loan to these individuals, and that investor becomes the bank. That investor is willing to hold a note. We basically, what I call a note investor. They buy a subject to, they create a new note, they become the bank, and they sell the property to someone else. Now, the benefits of that is that that investor does not have to babysit the property, because he or she does not own the property. So they don't have to do the AC, they don't have to do the roofing, they don't have to do the plumbing. But on the flip side, the cons of that is that they don't get the appreciation, they don't get the tax deductions, right? They don't get any of that because they don't own the property. However, they do get the positive cash flow, which is one of the benefits of, you know, becoming the bank and creating a new note. And in that situation, the way it works is they find a motivated seller, they buy their house subject to, right, for their debt balance, and they make the monthly payments, and they turn around and wrap it and increase the interest rate. Let's say they had 2.3% interest rate from the existing seller. They buy it, they turn around and owner finance it, maybe 6%, 7% interest rate to a retail buyer, and they're going to get a lump sum of money as a down payment. They're going to get monthly positive cash flow, right, because of the increase of the interest rate and them wrapping it. And at the same time, they may be having back-end equity cash out, because maybe they bought the house for 100 and they owner finance it, which means they're able to get more money. Guys, jab the like button. I really appreciate it. It helps out the algorithm. So there might be some back-end equity because they sell the property more than the loan balance was because a lot of people are willing to buy owner financing. They're willing to pay higher price, so there might be some back end profits. Okay, so we talked about being a landlord with a subject to. We talked about being a note creator, what I call a investor banker, that you become a bank in a sense. Okay, doesn't mean you go lend out money, because that's not what it is. The investor buys the property subject to the existing loan that's there. They just owner finance that and create a new note, right, to the renter buyers. They give them the down payment, they give them the monthly payments, and that buyer owns the property. They deal with all the responsibilities and liabilities, but on the other hand, they get all the benefits like equity and build up and appreciation, etc., and the tax benefits. But the investor doesn't get that. The buyer gets that. Now, the third type of subject to investor. But before I forget, if you're interested in working direct with me, guys, on finding these types of deals, then I have two options for you. Number one is you can join me in my profit sharing, but this is only for people that are already successful, because it costs $3,000 to get in for 1 month of coaching. All right, but I'll work with you on one deal and we'll split the profits. But you'll also get a lot of business tools and things you need, like paperwork, like marketing materials, to be able to go get that deal where we could split the profits. If you don't have success in your life, or you want to do it yourself type of person, then join my Abundance Club, guys. It's $97 a month. We meet every week, every Saturday from your computer. Now let's talk about the third type of subject to investors. This is what I call for wholesaling. Subject to investors investing and wholesalers go really, really good, because wholesalers are running around doing all the heavy work, lifting, doing all the marketing, talking to these sellers. But not every seller in America has significant equity. Not every seller in America owns their house free and clear. Okay, very small percentage of people in America own their house free and clear versus the masses that have debt on it. Okay, so when a wholesaler learns how to negotiate a subject to property, they just add another tool in their toolbox, because there's a lot of investors like myself that love to buy a property subject to, or love to buy a property and become the bank. So they're willing to pay money for an assignment fee for that wholesaler to go find a deal, to go negotiate it, and bring it to us in a platter right there. So all I got to do is give this wholesaler his assignment fee, show up at a title company, I'll do the transaction, the deed comes into my name, I do the funding. The wholesaler gets paid for just finding a deal, negotiating it, and put it on a contract, and then handing that contract to me. Okay, so wholesalers that understand subject to increase their worth in the marketplace significantly, because so many people will love to buy owner financing properties. That's technically what it is. Okay, not only are investors willing to, but a wholesaler can now retail it to that end buyer if he or she decides to do that. That way they even get more money, and so on. Now, some of the benefits of wholesaling is subject to is that it's quick in and out, right? You're not getting the deed into your name. You don't have to have all the liability. There sure is still some liability in anything you do in America, but a wholesaler's liability is like, and I'm not an attorney, so speak to your attorney. I'm not giving legal advice, but these are just my opinions. It's only this much, versus a fix and flipper, the liability is this much, or a landlord, the liability is this much, right? So liability is very, very low and a subject to investing for a wholesaler. Also, they don't have to have all the capital that's required to do the deal. Okay, if the house is worth 200 or 500 or a million or 100, doesn't matter. All they're doing is just putting paper, contract, and that's what they invested in. Maybe $2, $10 for earnest money, right? But that's all they have locked into the deal, versus hundreds of thousands of dollars. So low risk, low liability, very small, very, very small amount of funding is required. So those are the positive things of wholesalers and subject to. But the negative aspect is that wholesaler doesn't get that positive cash flow, because they don't own the property, right? They're just quickly selling the contract for an assignment fee. Okay, they don't get to have equity, right? Because they're just in and out. They don't get to get the appreciation. They don't get to get the tax benefits. None of that stuff, right? They're just in and out. So that's negative. But on the positive side, they don't have the liability, all the headaches that go with ownership of property. So that's the third type of investors that are subject to investors, that are wholesalers that are smart enough to realize that, hey, when I spend money marketing, I can't buy every house at 50 cents or 60 cents, but I can buy it maybe at 80 cents or 90 cents or 100 cents, but it's owner financing and I don't need to bring a whole lot of money in, okay? And there are tons of people retail that are willing to buy it, but also there's tons of investors that are willing to buy it, like Mr. No Fluff. So if you got a deal, submit it to me. 2020, best time to be a real estate investor, in my opinion, guys. Guys and ladies, please click the like button. Let me know what state you're in, and if you love to buy subject to, if you have any subject tos, leave a comment. I'd love to hear from you, okay? Now, the fourth type of investors that love subject to, and that's a very small percentage because they don't know about this. Majority of people don't understand OPM. They don't understand equity maximizers. They don't understand subject to investing. That's why I highly recommend everyone joining my profit sharing if you have $3,000 for 1 month of coaching, or in my abundance mentorship, which is just $97 a month, guys, okay? Now, why fix and flippers love subject twos is because a traditional fix and flipper that goes to the REI clubs, or, you know, what they're going to do is have their own money, or they're going to have to go to a hard money lender or just raise money to do a deal. But a fix and flipper that has been into my training, they understand that if they find a motivated seller, the seller themselves may be willing to owner finance the property for a short term, maybe 6 months, maybe a year, depends how long the fix and flipper needs to generate and fix the property. So it has a massive benefit for fix and flippers, because instead of them coming up with the $200,000 or the purchasing price to buy the property, instead of them going to a hard money lender, right, and paying 18% and 4 points or 5 points, whatever, what they can do is have the seller become their private bank for a short term, maybe 3 months, maybe 6 months, maybe a year and a half. Depends on the deal, depends on how long it's going to take that fix and flipper to buy the property, rehab it, put it back in the market, and then sell it. And once they sell it, then they can pay off the seller. So one way, if a fix and flipper that's sophisticated has joined the profit sharing or the academy, is when they find a motivated seller, they'll say, hey, Mr. Seller, look, I have multiple options for you to close your deal. What I call my superhero closing, that's given to you in the no fluff negotiation and profit sharing totally for free, or you can get it at a deep discount in the Abundance Club. That's why I tell everyone to join the Abundance Club. But I have a strategy called the superhero closing, and which gives the seller all their offers and tells the seller, look, man, I can give you a cash offer. It's going to be a deep discount, or I'm willing to give you more money, right? I can give you a little bit more money, and what I need you to do is just hold this property for 6 months or 12 months. And what I'm going to do is I'm going to sink 10, 20 grand of my own money into this property to rehab it, and then I'm going to sell it because we can, make more money. And if the seller says no or yes, and if they say no, then I have another strategy, what I call the all-American closing, which tells the seller, look, you know what, you should just join the profit sharing or the abundance. I won't even get into that, okay, if you want to know how to do the all-American offer. Anyways, going back, fix and flippers should love subject to, because they don't have to go to a hard money lender, nor do they need to have that lump sum of money. All they have to focus on is that rehab money, which is usually way less than the purchase price of the property, okay? And it's very beneficial because that fix and flipper doesn't have to pay interest only payments, doesn't have to pay a lot of points, a lot of money up front, doesn't have to pay high interest rate that's like ridiculous, right? So it's very valuable for fix and flippers to find motivated sellers, try to negotiate a cash offer to get it real deep, but if they doesn't want to do it, then try to sweeten the tea in a way where the seller becomes the fix and flipper's bank. Therefore, the flipper has time to fix the property while not making no payments, while maybe having 0% interest rate, depends on what's negotiated, have a non-recourse loan, whatever the story is, negotiated, and once they sell the property, then they get their money, then they pay off the seller, then they collect their rehab money, and then they'll have what's left over as profits. Versus if they went the traditional way with a hard money lending, they would have to pay all these junk fees, which makes their profits so skinny. And that's why subject to investing is very, very powerful for fix and flippers. It doesn't matter if you're in commercial, you're in residential, fix and flippers can use subject to investing to not come up with all the upfront money. And the benefits is extremely, I mean, I can go list boom, 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 boom. And the cons are, you know, everything has a con, but it's so little that I can't even think of any. Because as a guy that, if I'm doing a fix and flip and I got to go get indebted 200K, pay 6 points, pay 18% interest, versus the same house is 200K, but the seller has a mortgage, let's say of 80. And I say, hey, Mr. Seller, let me just buy your house. I won't make any payments on it, all right? And let me put 10, 20 grand of my own money. I know how to do fix and flips. I know what the market wants. I have to go get a real estate agent and I'll fix it up and sell it. And maybe we'll even split the profits, 10% for you, majority for me, or I'll split it 40, 50, or I won't even mention that. I'll just give you a little bit more money than normally if I would with a cash offer. And a lot of sellers are just, you know, they want profits just like me and you do. And many of them will say, look, I know the market is going down in 2020, 2021 and moving forward. This sounds like a great idea, right? Because, you know, I tried to list my home, I couldn't sell because it didn't pass inspection. But if you're gonna put that money into it, then yeah, I could get a lot more money out of it. And, you know, yeah, I understand that you're taking a risk, you're putting your own money, you're putting your time. So I'm not gonna get the whole pie, but I may only get 10% of the pie or 20% of the pie, plus my profits that I got. So it's a great win-win all around. That's why I love subject to investing. That's why I like creative real estate investing. And that's why I love real estate, because in stocks, I couldn't create a situation like that. If the thing was $100 per share, I couldn't create a situation where I can get it for 50 cents on a dollar. I couldn't create a situation where I could get it where the, you know, the broker's willing to finance me, right? Just like a house is, all right? All right, guys, thanks for watching. Click the like button. Don't take no for an answer. And remember, we live in the best country ever, America, and if in 2020 is the best time to be a real estate investor. And this is just my opinion, but I called it back in 2016 that gold's gonna rocket, and it has. I called it that we're gonna see a massive crash, and we have, and we're gonna see another leg down, and we will, in my opinion, not financial advice, and there's gonna be a massive, massive tsunami of foreclosures. I don't care what the media says, they're fluffing it, and there's no choice. There's millions and millions of people every week losing their jobs. There's millions and millions of people in forbearance program. There's millions and millions of people that are upside down because of property prices coming down. In the next 6 to 18 months, we're gonna see prices coming down significantly. They can't stop it. There's gonna be tons of motivated sellers, tons of opportunity. Best time to be a real estate investor. Join the Abundance Club for $97 a month, 4 meetings a month. If you got your money right, profit sharing, 3K, 1 month of training. I give you $9,500 of business tools that you need. Like, the list goes on. I can't even explain it here, guys. Much love, peace.